I'm Blaine with Advanced Real Estate.
Hey, I'm Kyle, loan officer at Fairway Mortgage in Crown Point.
And it is September. We're here for the mortgage September update.
Yeah, football season,
School.
leaves are falling.
Yeah.
Mulch them up, don't rake them. Be smart
Pretty
about
much.
it. Or hire somebody.
Just mow a little more often and get it all taken care of.
One of the two, right? Yeah, so.
All right, so what are we seeing in right now in the market? What do we need to know?
We're feeling it. Everyone is feeling it. Obviously, the cost of everything's higher this whole year, and we were supposed to have seen some relief in inflation by now, and the data kind of lags. So while I feel that somewhere between that 5 and 6 is normal, right now you're seeing between 7 and 8. It's just outlandish. So as the Feds continue to hike rates, does that mean that mortgage rates go up? No. It means they're trying to bring spending and inflation down, and as that value of the dollar changes and increases relative to inflation coming down, rates should come down too.
Okay.
The inflation and mortgage rates follow each other because that value is higher.
Sure.
And all our mortgages are backed in securities, and that's how investors make their long-term money.
Right.
So, not quite saying recession, while some sectors of the economy could be in, the mortgage industry is hurting because of the affordability that's out there. No one can afford even the lower-priced homes at these higher rates. That just the Feds have priced everybody out of the market, unfortunately. Mm-hmm. So, as inflation comes back down, you're going to see mortgage rates follow. That's what's important. And I want to speak to the debt you could have acquired because of the cost of living has increased, or maybe you have gone out and bought a new car, and that's a $500 or $600 payment when it could be $300 or $400. Well, you have what's called your blended rate, meaning all of the debt you have that you're paying interest on has a cost, has an expense. And set your mortgage aside. Well, remember, a mortgage is a tool, not a payment. So every time you make your payment, you're building equity. Depending on how long you've stayed in that home and relative to appreciation, you might have a nice nest egg. Well, you can turn that into paying down your revolving, more expensive debt. And while the mortgage itself is a larger balance, part of that's equity, right? So those debt consolidation tools are online. We can have a free chat on that, and we can help see, okay, here's what you're spending on every single thing, XYZ. If you just put all of that into one mortgage payment, again, relative to how long you're going to stay in the home is important to identify, but you could kind of see an opportunity cost in, putting that equity to work for you.
Right, and absolutely, because it's still cheaper to buy than it is to rent.
Always. Rent is 100% interest
rent
rate,
always,
right?
as mortgage rates go up and mortgage payments go up on the average, so do rent. So does rent everywhere. So because the landlord's trying to pay for their mortgage that is going up, taxes are going up, so they're going to make up the difference, not out of their own pocket. They're going to add that to the rent payment.
Right.
So it's always a good time for first-time home buyers to get into the market.
And not saying rent's bad. It might fit your circumstance right now.
Right.
But
absolutely,
it's not cheap.
Exactly.
Let's put it that way, okay?
Some people like the ease of renting. They don't have all that, the worry of, I got to get this replaced, that replaced, and then they can just call the landlord, hey, this needs to be fixed and be done with it.
Right, exactly. And there's a time and place for that, and especially if you're building up to home ownership. And I want to touch lastly on that. A lot of lenders and investors, you're seeing down payment assistance programs go away. We're actually bringing on more. We had a new program come out. It's a federally offered program nationwide that we're teamed up to be able to offer for first-time buyers. Basically up to 5% of the purchase price is what the down payment assistance program provides. There can be payments on that 5%. There's also forgivable versions of it where you're not going to have that. But the debt to income ratio, the thresholds, and the credit score minimums, also income limits, are a little more flexible in that program. So something to explore as a last-ditch effort for somebody that needs something now but might not otherwise qualify if they don't have it saved up. So ask your bank or lender about the down payment assistance programs, first-time buyer or not, because there are others that allow for not being a first-time buyer out there. So, so hopefully that helps you. If you have questions, comment, message, text, stop in. We're on the square Monday through Friday if you need us, but available 24/7 otherwise.
Let us know if you need anything, and we'll get back together in October and see what's going on then.
When more leaves have fallen.
Yes.
And more footballs have thrown. So, all right.
Absolutely.
We'll see you.
Have a good one.